You ever draw a trend line and convince yourself the market respects it, only to get stopped out moments later? Think about your last trade. Did that line really give you an edge, or did it lull you into a false sense of security? Today, I'm going to strip that illusion away and show you what trend lines really tell you about the market, not what retail traders want you to believe. Most traders fail with trend lines because they misunderstand the market itself. They think a line connecting 2 points is some magical signal. They chase the price when it touches, panic when it breaks, and ignore the behavior that drives the move. Trend lines are not magic. They are a tool to read structure and intention, nothing more. So what is the market doing when a trend line seems valid? It's not respecting your drawing. It's delivering liquidity, testing zones of interest, and revealing where institutions are placing their orders. Those lines you obsess over? They're just visual guides for behavior. The real story is in structure shifts, when the market moves from higher highs and higher lows to lower highs and lower lows, or vice versa, and the liquidity that's being hunted along the way. A trend line only has value when it aligns with structural behavior and intention. You draw an upward line, but if the market keeps breaking it for short-term liquidity grabs, you aren't wrong, you're misreading the market's underlying plan. Think in terms of price delivery patterns. Every test of a trend line is an attempt to collect orders. A break followed by a retest, that's not failure. That's market logic in action. Step 1. Identify behavior. Watch how the market approaches a trend line. Does it pause, accelerate, or overshoot? Don't guess, observe. Step 2. Interpret structure. Is the trend line part of a consistent sequence of higher highs and higher lows, or is it a cosmetic line drawn on erratic swings? Step 3. Anticipate intention. Where is liquidity likely hiding? Where could the market be trying to shake weak hands? Step 4. Confirm context. Look at the surrounding structure, recent shifts, inefficiencies, prior liquidity grabs. Step 5. Execute with discipline. Only act when the behavior, structure, and intention line up. Nothing else matters. Here's what most traders miss. Trend lines are not signals to enter or exit blindly. They are behavior filters. They help you identify where the market is vulnerable and where it's likely to trap emotional traders. Ask yourself, are you trading the line, or are you reading what the line tells you about market psychology? Drop a comment if you've been caught chasing the line. You're not alone. Now let's integrate mindset. The best use of trend lines isn't guessing reversals. It's patience. It's sitting on your hands while the market tests liquidity, knowing that executing too early is the fastest way to bleed capital. Emotional control isn't optional, it's the edge. Discipline isn't a buzzword, it's how you align with institutional behavior rather than fight it. Every break, every retest, every bounce is a story, and your job is to read it calmly, not react impulsively. Trend lines show structure, but structure without understanding intention is meaningless. You can see the line perfectly, but if you ignore the behavior behind it, you're trading hope, not logic. Most retail traders fail because they chase and panic. You succeed by observing, interpreting, and executing with precision. That's the difference between guessing and trading with an edge. Trend lines are guides to market intention, not signals for blind action. Traders fail when they forget the story behind the price, when they ignore liquidity, and when they let emotion drive entries. When you combine trendline observation with structural reading, patience, and disciplined execution, you gain clarity and edge. The market doesn't care about your lines, your feelings, or your hope. It cares about orders and behavior. Trend lines give you a lens to see that behavior clearly. Use them to align with the market, not fight it. And remember, the line isn't your enemy. Your misunderstanding of it is.